This is the Kindle report for Wednesday, March 11th. Welcome everyone, this is Bob Kendall. Don't forget to subscribe and hit that bell so you'll know when I post these videos. Today was another very session. Overnight, the markets rallied in response to proposed tax cuts and other items on a fiscal stimulus level. Markets came in strong. Shortly after that, the governor of New York announced that he was going to use the National Guard to protect the public against coronavirus. Meanwhile, there's 16 new cases. If you follow me on Twitter, I told everybody it's going to be a very low standard. They want to try to get the martial law here like they've done in Italy and like in China. Stories out on the internet going, we're 10 days from our hospitals being overwhelmed. All of these stories, and it appears to be hype. I keep saying this, there's not a lot of new cases here. And folks are trying to compare us to Italy, not a good comparison. You're looking at the difference between a private health system and society versus a socialist healthcare system in Europe. They're having issues in the UK and in Italy, and they're just freaking out. The best measurement for markets is the market itself. And I'm telling you, the markets do not believe that the coronavirus is a threat. We did see a reaction to the announcement by the governor of New York, and markets sold off. We actually went down to a new low, and it started recovering mid-session. And then in the last hour, we saw a complete reversal. Market rallied, and we finished up just short of 5%. So we basically took away most of yesterday's sell-off, not all of it. And when I go through the details tonight, you're going to see that there's still a gap and there's a significant pattern that unfolded yesterday I'll go into in detail, which is an outside reversal, which confirms if we close higher today, it will confirm that there is a low in place. The other thing that happened today is Treasury yields went vertical. I talked about this just yesterday that I thought we'd see 0.7, ultimately 0.9, maybe all the way back to 1%. None of these markets should have been here based on anything. The entire hype of the coronavirus and the threat pushed everything much lower. And then, of course, we had the oil situation that came up with Russia and Saudi Arabia. Crude oil has almost back to 40. It's at $38 on WTI. So all of this stuff, this quick little snafu, everything was going to come to an end. Everybody that was on TV on early Monday morning was talking about how this was it. All kinds of bankruptcies in the oil patch. Literally was a blip so far. Maybe there's another round, but the charts are saying a different story. So let's go ahead and take a look at what is going on with the technicals. Starting with the S&P 500, you're going to see this huge reversal pattern here where my cursor is. And we made a new low from yesterday, not by much, I think by 73 cents, 0.73, but it's enough for the pattern. And we made a new high and we closed just off the highs of the session. This type of pattern is very bullish, but overnight what we're seeing, if you look over in the right-hand corner, you'll see that the futures are down 1.7% right now. We're down 48 handles. But this means nothing with the kind of action that we're seeing. Yesterday, we saw literally a 150 handle range again. These are getting to be normal. And I have to tell you that even overnight, the same type of action intraday is occurring overnight. The machines are running literally 24 hours a day right now. They're never turning them off. The same type of action that we've seen over and over for the past couple of weeks now is continuing. But the most significant thing I want to talk about tonight is this reversal pattern. The importance is that we need to close higher today. We need two things actually have to happen. Is one, we have to make a higher high than yesterday. So we have to go trade above 2882.59. And two, we need to close higher, and we're going to have to close above 2,900 tomorrow. There's a couple other things that are coming into play, and I've been 10 period moving average is coming down. It's going to be 2950 tomorrow, and on the next day it's going to be around 29.30. So we're going to hit a wall here for this market, even though we might get a confirmation of this reversal pattern. This is where some action will start to really set up a bottoming pattern if it's going to happen. And I made this comment yesterday that I believe we'll know everything we need to know by the close of Wednesday. This pattern looks like it's going to rally a little further. We're going to try to fill this gap that's right here. And the low end of that gap is 29.01. It's really simple to fill this tomorrow. The ranges have been between 150 and 175 S&P points for the last 4 days. It can be easy to fill this. I'm going to bring up the futures on this chart. I just want you to see this real quick. You can see what this bar looks like right now. This is perfect. If we come in down 2%, if you're looking for a trade, that's going to be an absolute perfect location for a trade. We should see a rebound and markets start to move up toward the highs, 28.82, probably get to around, we should get up to around the 29.07 level. There's a possibility of going as high as 29.50. The cash market suggests that somewhere between 29.04 and 29.10 should be the top end of the range tomorrow. Could go 29.42 to 29.50. We'll see how kind of volatility we get. The other thing to look at is you can see all the PPMs are turning up, and this is something I talked about several days ago. What you're going to see as we approach this 10-period moving average, which is likely to occur today, you're going to see the momentum start to collapse here. That will set up a further pattern over the next several sessions. This zigzag pattern is going to set up something like this, and this moving average is going to start to come through this area right here. It should start to curl like this. This average will come down into here, and this one over to here. And meanwhile, we should see the markets trade in these ranges. So we could trade as high as 3,000, maybe 30.50 during this pattern. And then there should be ultimately a retest of the lows. Let's look at the long-term charts. It is likely this monthly chart is going to be the low. 27.24 is the extreme. The low today was 27.34. So we're within 10 handles of this price. So I'm expecting this to hold. We should start to trade somewhere between the 27.24 as high as 3,050. That should be the configuration for the next. One of the things I've been discussing in great detail lately is that there's a lot of gaps in these charts, and they usually will get filled. Well, we filled one yesterday on that gap down when the treasuries fell. Now we're starting to fill that. We have one more left up here, and we should see this level hit. It's going to be, this pattern should go as high as the 0.9 level, maybe 0.93, filling this gap. And then we should start to see a similar configuration with the markets. We should start to see some consolidation down here. Most likely, we've seen the extreme low in the treasuries, and things are going to start to recover from here. The gold market continues to trade very similar to what it did about 6 sessions ago, where we got back above the 10-period moving average, and we're just hovering above that support line, which is that 1642 level. The problem with this market is that it continues to lose momentum. So we could go to the next level, which would be around the 1630 level, and then set up a pattern from there. But as I've talked about over the last week, this is not the breakout pattern. The ultimate would be going all the way back toward the 1601 level before we finally complete this pattern. This is definitely a long ways to go. Momentum is not participating. There's no signs that this market is ready to take off. Expect it to continue to consolidate with a slight bias to the downside for the next several days. This is the crude oil chart, and this includes some action overnight. We're already seeing it back at 39.41. It's up another $1.33. Yesterday it closed at the 38.08 level. This is going to continue to fill this gap, which the bottom of this gap is the 43.41 level. I talked about this yesterday, that I came back toward this 40 to 43 level. And it looks like that's exactly what's going to happen. Doesn't appear that anything's going to be able to stop this pattern that's happening. We may see some consolidation, maybe set up a right shoulder, trade back to around 37, maybe 35. Should continue to recover, and that gap will be filled within the next 5 to 6 sessions. This will complete the broadcast. Thanks again for watching. Don't forget to subscribe and hit the bell. We'll talk to you tomorrow.